If you're still wondering if Tesla is a good stock to buy right now, then this video is one to not miss out on. Several investors find it hard to decide what stock is best for them at a particular point in time, and that's okay. The volatility of the stock market oftentimes makes it difficult to identify which stock will be trading high up in the chart in a few years. However, at some point, experts have predicted that certain shares are going to perform better in the future, although this is never guaranteed. In a recent tweet, Tesla bull and investor Leo Koguan reveals why Tesla may be a good buy at the moment. According to him, if investors can cheaply buy the best company in the world, then why would they buy the second or third best? Hey guys, welcome back to Tesla Tomorrow. Tesla has been a monster stock over its history. The stock hit a bear market low of $101.84 in January, although it has been in an upward trend in recent times. Tesla recently reported mixed fourth quarter results, topping earnings estimates. The company's stock also held up as Musk said he was bullish about 2023, and that the company might be able to produce 2 million cars this year. For that reason, several Tesla investors looking forward to Tesla's performance this year, and by extension, its stock. Could Leo Koguan be right? Is this a good time to buy Tesla stock? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Leo is one of Tesla's largest individual shareholders. As of August 27, 2022, the Tesla bull has amassed about 22.6 million Tesla shares. He also recently made Forbes' list of the 400 wealthiest people in the world, partly due to his investment in Tesla. Leo said in a recent tweet that Tesla is extremely undervalued, which is why he invests 100% only in Tesla and does not buy other investment assets. According to the Tesla bull, he estimates that Tesla's Q1 this year could be around 450,000 EV delivered and about $2 billion free cash flow. And in a recent tweet, the billionaire disclosed that he bought an additional 4.2 million Tesla shares at an average price of about $250 per share within 1 year. That brings his accumulated Tesla share to around 26.5 million, and he still plans to buy more Tesla shares when he has the resources. Leo was an early investor in Tesla, although the Tesla investor almost lost his shares at some point. Early 2020, Leo had 2.3 million shares of Tesla. This was before the 5-for-1 stock split, which amounted to about 12 million after the first split, and would be about 36 million Tesla shares after the latest stock split. At the time, Tesla shares were trading at about $34 per share, which gives approximately $1.2 billion as the total worth of his shares. However, following the crash in Tesla's stock price in March due to the effect of the pandemic, Tesla shares dropped nearly 50%, causing him to lose a significant amount of his investment in Tesla. 3 years ago, Tesla was grappling with the impact of the pandemic. This impact was seen not only in China, but across most of its other markets. The epidemic forced temporary closures of Tesla's Shanghai plant and stores throughout the country. Likewise, inflation and the war in Ukraine threatened access to Russia's nickel production and had put pressure on Tesla, resulting in significant price increases. Tesla hiked the price of long-range versions of its Model 3 and Model Y by $1,000, as well as prices on every electric vehicle it sells by between 5% and 10%. On the 9th of March, 2020, Tesla shares plummeted by 13.6% to $608 per share, dropping 6 percentage points more than the S&P for the day, as plunging oil prices and the continuing pandemic weighed on investors. The stock also bottomed at $350.50 on March 18, 2020, during the pandemic-driven sell-off. Luckily, Tesla has been able to pull through this crisis, although Elon Musk's involvement with Twitter still remains a source of concern for investors, including Leo. Although the Tesla investor once called himself Elon's fanboy, he didn't hold back his dissatisfaction about Musk's Twitter deal. Other analysts and Tesla investors like Dan Ives of Wedbush have also been skeptical of the CEO's involvement and focus on Twitter. In November, Ives called Musk's Twitter venture a circus, explaining worries of brand deterioration. Fortunately, concerns are beginning to die down, and Tesla is giving its investors something new to talk about. Recent reports have stated that Tesla holds nearly 50% market share in Norway this month, thanks to stellar Model Y sales in March. The American electric car maker has been dominating Norway's EV sales for quite some time and recently hit a new milestone this year. Based on figures from the Norwegian Road Federation, Tesla set a new sales record in March. The car company sold approximately 5,639 Model Y units in Norway, beating its last sales record of 5,315 Model 3 units in March 2019. Tesla has broken its own delivery record in Norway for this quarter, and there is still time remaining. The automaker delivered 8,670 in Q4 2022, and it is expected that it will deliver over 9,000 vehicles in Norway this quarter. The second closest competitor to Tesla is Volkswagen at about 3,700, and third is Toyota at about 1,900. Norway leads in electric vehicle adoption globally, boasting the highest share of new electric vehicle purchases worldwide. In the past months, zero-emission vehicles have made up over 50% of its overall car sales, up from 31.2% in 2018 and 42.4% in 2019 compared to the United States, where electric vehicles make up only 2% of new car sales. This gives one a good idea of Norway's strong leadership position in terms of electric vehicle market share. According to reports, electric vehicles accounted for almost 4 out of every 5 new car registrations in Norway last year. About 138,265 new electric cars were sold in the country last year, representing 79.3% of total passenger car sales, and Tesla topped the list with a 12.2% market share. Norway, which is both a major producer of oil and gas, as well as a pioneer for zero-emission cars, comfortably beat the previous record of 64.5% set in 2021. According to Secretary General of the Norwegian Electric Vehicle Association, Christina Bu, 8 out of 10 people choosing fully electric instead of combustion engines is a considerable step towards Norway reaching its climate goal of 100% battery electric vehicle sales in 2025. She added that there is no excuse for internal combustion engines' unnecessary pollution when the climate crisis is so urgent to solve. Norway has long been a major producer of oil and gas and remains the biggest oil producer in Western Europe, as well as the third largest exporter of natural gas in the world. Its greenhouse gas emissions back in the 1990s were around 51.7 million tons per year. The key benefit for electric vehicle owners in this country remains the green tax deals on buying, leasing and owning EVs. The accumulation of these electric vehicle tax breaks, plus the hefty 25% tax on fossil fuel cars, means that electric vehicle models in Norway are often more affordable than fossil fuel cars, even without the electric vehicle subsidies that are available in other countries. Besides rolling out electric vehicle incentives, Norway has also invested in first-class charging infrastructure to support the transition to more sustainable vehicles. Just like in Norway, Tesla is also thriving in the Chinese market. According to sales numbers released by China Passenger Car Association, in the month of February, the Tesla Model Y became the best-selling SUV in China. Tesla sold a total of 25,279 Model Ys in China, and not only was this number enough to make the Model Y the most sold electric SUV, it also made it the best-selling SUV overall, even counting internal combustion vehicles. This was indeed an incredible performance from Tesla, and the fact that the Model Y beat vehicles that have a starting price significantly below that of the EV, that is one significant proof that the Tesla Model will be the best-selling vehicle in the world, even when compared to internal combustion vehicles. Although many may not believe that Tesla will have about 12% share of the auto industry in the next 10 years, the reality is that the rate at which Tesla's demand is growing, the car company could have as much as 20% share of the auto industry. This is because EVs will make up more and more of a percentage of vehicles sold in the future, and several electric car companies are still far behind. Do you think now is a good time to buy Tesla shares? Let us know down below, and don't forget to tell us what your valuation on Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.